Hey guys, hopefully everyone is doing well. Today's target is to solve question number 6. The chapter which we are related with is accounts from incomplete records, alternate names, single entry system. Today's question is very interesting as you can see that there are two different columns present over here. First, January 22. It means all assets and liabilities present over here opening. Second, December 22. All assets and liabilities are for closing. Opening statement and closing statement is available. So this is the first time we will be making proper opening statement. Secondly, in this question, few adjustments are present. I have told you all adjustments are related with closing statement. And as usual, we have on left side of our page profit loss statement. Beside this, opening and closing statement pro forma is present. So this was brief introduction. We are ready to start our question. Let's begin. Since these are opening assets and liabilities, no adjustment is needed. So we will directly post these amount to opening. Cash at bank. Opening statement. We will write cash at bank. Amount of cash at bank given over here 8400. Write down 8400 in opening asset side. After that, cash in hand, no amount is present, you can skip. Next, debtors. Debtors are asset, amount of debtor 52,000. Write down in opening asset. Then we have creditors are your liability. So write down creditors in liability. Amount of which 16,000. Post 16,000 in front of creditors liability side. 1 second. Normally in account we bother less about spelling, but this is important. Creditors 16,000. Then we have stock. Stock is your asset. Opening amount of stock is 16,500. Put 16,500 in front of stock. Stock we have written. Then we have plant. Okay, plant is your fixed asset, so little space we will give. Amount of which is 20,500. After that, you can see it's furniture. Furniture again current fixed asset 1500 you have written. So guys, this was the last asset. It means you can now easily calculate your capital. Which capital? This would be considered opening because everything was on 1st January. How? Assets minus liabilities. Total assets are visible. Look at here. 9,900, and then you will subtract total of liabilities 16,000 over here. This way you will be able to calculate your capital. What I have said, 98,900 was total of asset side, 16,000 total of liability side. This way your capital would be calculated, amount of which is 82,900. And look at here, answer of opening capital 82,900 is present over here. So guys, in this way your opening statement is completed. Here please note, whenever you will make closing statement and adjustments are present, you will solve adjustments first, then you will come to asset side. So let's start. Masood withdrawn. Withdrawn means these are drawings. You will come over here, 25,000 is the amount. Okay, so drawings 25,000 you will be writing over here. After that we have but had introduced fresh capital. Easy. 7,000, but note, underline this word, 1st July. Introduce capital is on 1st July. Remember it that capital has been introduced On 1st July, you will go to profit loss statement, will write 7,000. Look, why it is important to understand that date, because if interest is present, then you will have to see a provision for 10% on debtors. This was your first year concept. We are making closing statement. So over here, first of all, you will mention how much amount of closing debtor is present. Look at here, these are debtors, and we will go to 31st December, yani closing. So debtors are 85,000. Here put 85,000. Next step, it is said a provision of 10%. Provision would always be subtracted. Let's provision for bad. And how you will calculate this provision? It was said to calculate 10%. Once again, I'm letting you know this is 10%. So here amount of debtor 85,000. Then you will take 10% and this would be 8,500. So provision for bad debts would be subtracted from debtors, and how you have calculated? You have taken the percentage which was present in the book. Look, we would subtract it, less provision. So 85,000, and then you will subtract 8,500 of depreciation. So guys, debtors adjustment completed. Write off depreciation on plant 15%. Again, you will go to closing. Since plant is your fixed asset, you will come up. Now let's see how much value of plant at closing statement. This is your plant, and we will go to second column. 21,000 is amount of plant. So value of plant we have seen, it is 21,000, and rate of depreciation which is described over here is 15%. So you will calculate depreciation of plant as 15%. So let's depreciation 21,000 was amount, and you will take 15%. Now understand that value of asset multiply by 15 divided by 100. You have got your depreciation over here. Let's mention 3150 was amount of depreciation. What you will do, this depreciation would be subtracted, 21,000 minus 3150. So this part of adjustment is also completed. We were over here, plant depreciation. Now interest on capital 6%. So first time we will also be calculating interest on capital. This is part of your profit loss adjustment. Over here, as you can see that capital opening calculated as 82,900. So just write down 82,900. Introduced capital is also present. So let's calculate. Over here, first we will calculate interest on opening capital. Opening capital 82,900. Then we will multiply it with 6 divided by 100. How? Because 6% is given in our question, interest on capital 6%. Note it down, underline this, 6% is given in the question. So first interest was calculated. How much amount? 82,900 was amount of opening capital, then multiply by 6 divided by 100. You have got how much? 4974. Just note it down. This is your first interest, 4974. First interest on capital has been calculated. Now second interest. Read this formula. Capital introduced is needed. And you see that our capital introduced is present over here, 7,000. Write down 7,000 interest on capital, then multiply. Read formula. Percentage is as usual 6%. And then read formula. Multiply months over 12. Come back. I was telling you to underline this date. Fresh capital 1st July. Now you will count the number of months. 1st July means July will also be included. July, August, September, October, November, December. So these are 6 months. So when you will calculate your interest, you will multiply by 6 months divided by 112. This was your formula written over here. So once again I am letting you understand 7,000 amount of fresh capital, then you have multiplied 6 divided by 100, 6%, then multiply by 6 months divided by 12. So you have got your amount of interest on introduced capital 210. So in this way two interests are calculated. Over here just write down the sum. There were two interests. First interest 4974, second interest 210, and then after adding you will write interest on capital over here. Alright guys, this was your last adjustment, interest on capital. We are now open to write remaining asset. First is cash at bank. We will go to closing asset side, and here you will start writing cash at bank. Amount of cash at bank is 6,500. We will write closing statement. So here 6,500. After cash at bank, next asset is cash in hand. This would also be written over here. Cash in hand. Amount of cash in hand given is 200. So just write down 200 in closing asset side. After cash in hand, we have debtors 85,000. I think we have already written. Look at here, debtors, because its adjustment was present, so no need to write again. Then we have creditors 2,500. So you will be writing amount of creditors in closing liability side. Amount of creditors mentioned 2,500. Write down in front of creditors in closing liability side. Creditors done. Then we have stock is your asset. So you will be writing this stock in current asset side. Write down. Amount of stock is 18,000. Write down in closing asset side. Stock is done. Then we have plant 21,000. I think we have already written. Look at here in closing 21,000 because its adjustment was present. After that furniture 1,500. This is also fixed asset. So you will choose closing fixed asset side. Amount was 1,500. So this was your last asset. As you can see, furniture, all adjustments are completed. So we can now calculate our closing capital. As you know that closing capital you can calculate by subtracting assets minus liabilities. How many assets? How much amount of asset? 120,550. This is total of asset side. Then you will subtract total of liability side, which is 20500. This way you will be able to calculate your capital. Once again I'm telling you, 120550 total of asset minus 20500. This is your total of capital. You have calculated 1,000,50. Let's check it out the answer. And you can see over here closing capital 1,000,50, and we have calculated 1,000,50. So it means our two answers completed. We will be posting this closing capital answer over here, 1,000,50. Alright guys, then you have idea how to calculate. First two amounts would be added. So here first two amounts you will add, closing capital and plus drawings. Then you will subtract 82,900. Again you will subtract 7,000. Again you will subtract 5184. So we have got plus sign. It means it's profit 29966. And look at here your net profit 29966. So guys, in this way all answers are matched. Our question has been ended. I am requesting you to please repeat this question for 3-4 times, and after completing, if you still feel anything difficult, please share your problem through messages, text, or you can directly contact to share your problem. I will humbly be trying my best to answer your question quickly. So it's time to end our lecture. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.